What's up, you guys? Welcome back to the Fire Grind. My name is Daniel, and on this channel we talk about stock market and personal finance. So in today's video, I'm going to do a quick overview of what's been going on in the markets today, because if you haven't been living under a rock, you'll know that the markets have had a bloodbath today. With the S&P 500 being down around 3.5% and a lot of the technology stocks going down a lot more, anywhere from 7 to 20% I've seen, then you might be worried if you're a beginner investor. So if we jump right here into the stock watching app that I have, I'm going to go into the portfolio here that consists of my US positions as well as my Canadian positions. So I'm actually giving you a bit of insight on what I invest in the US market. So if we jump onto the app right here, you can see that right away the top 4 holdings here that were in the green today didn't go up by that much. We can see that the Very Good Food Company went up by almost 2%, as well as Lancadia Holdings went up by 2.5%. So I did a video on the Very Good Food Company. If you want to check that out, click the button right up here. I'll also link it in the description down below. And there's a good reason why the Very Good Food Company didn't drop sharply today. However, I think the recent news was muted by the overall downturn in the stock market today. So if you're looking to buy into the Very Good Food Company, tomorrow might be your chance to, because the news was pretty big and you should check out that video. But anyways, moving on, if we scroll down to the bottom of the list here, you can see that my biggest loser was Green Power Motor Company. And we're down about 17% on this position here, and it dropped by $3.96. Other notable stocks that dropped fairly significantly today was Dye & Durham, dropping by 10%, or $2.85. We also have Docebo that went down by $4, and Lightspeed as well, and both of those actually dropped 7 to 7.5%. Then we have Well Health that declined 7% as well, and on top of that, CloudMD. So these stocks are some of the stocks that I've been mentioning in my recent videos as high growth stocks. And if you guys haven't been in the market for very long, what you should know is that the overall stock market gains or losses are amplified in small cap companies. That's because investors in small cap companies have less conviction when things are going wrong in these companies, because they're smaller and it's a larger possibility that these companies could fail. Whereas large cap companies, yes, they may see declines, but the chances of them going belly up is a lot less than a smaller company. But one thing that I've learned over my years of stock market investing is that if you see one major red day in the stock market, this doesn't mean that the next day is going to be red and the day after that's going to be red and we're going to see another March-like correction. This could just be a one-off, one-day correction that we're seeing. It could be a one-week correction, but ultimately, if you're a long-term investor, you should welcome these corrections as times to continue to average into your positions or open up new positions in stocks, because ultimately the stock market is going on sale. So don't fear these negative 3.5% days or when you see your stocks drop 10%, but you should consider averaging into your positions, because you're getting a stock on sale for 10%, and who doesn't love 10% off? Anyways, let's jump into my laptop right here and we'll go into an article as well as a couple charts, and then we'll finish off the video from there. So the first article that I'm pulling up here is by the Canadian Press. It says, North American stock markets plunge on sell-off of technology sector. So you can see that the stock market plunged on Thursday, and what the writer's saying here in the second paragraph is that given the context of the tech sector has led the markets through this pandemic, this small pullback that we're seeing today shouldn't be something that you're too worried about. It's possible that it could be the start of a correction, but one day doesn't make a trend. So basically we could see these sharp pullbacks in the stock market. However, tomorrow it's possible that the stock market could rebound. But if we see 3, 4, or 5 days in a row where the stock market drops sharply, just like we did back in March, then maybe that's a sign of a correction that's coming. But it's possible that we could see a correction coming just because there's quite a bit of risk in the market. As well as one other thing to note is that September is historically the worst month of the year, followed by October. So right now, a lot of traders or advanced investors who have been in the market for quite a while and just know the trends of the stock market, they know that September is historically the worst month of the year. So most people might take this trend into consideration and take some profits, because we have had quite a successful summer. If we look at the S&P 500 charts, you can see that just yesterday we hit new all-time highs. And if we just zoom out a bit, yeah, you can see the S&P 500 has never hit these levels before. But today we had this huge red candle right here. And one other thing to note is the RSI So you can see that on the day that we hit all-time highs, the RSI just peaked into the overbought territory, and it's sitting at around 82.90. So the fact that the RSI showed that we were in the overbought territory, maybe this is why investors took the chance to sell out of their positions. And once they started selling out heavily in the morning, so if we go into the 15-minute chart, you can see that in the morning there was a huge gap down and the stock market continued to sell off and off and off. And the reason for this is because when there's some major selling pressure in the markets, investors will take a look at this and be like, man, my position, I'm up already on it, and there's a lot of selling pressure. Maybe I should sell out of my position as well and hopefully get back in at lower prices. So if everyone's starting to think that as they see the market go down and down and down, and they want to lock in their profits, then they're also going to sell as well. Which is why we see this sort of herd mentality as everyone continues to sell off their stocks. And eventually we reach some sort of bottom here today before having a pullback up. But I think tomorrow it's possible that we'll see either a flat day or another pullback, because I'm sure that investors are thinking overnight. Today was a pretty significantly poor day in the market. The market's dropped 3.51%, which is significant for the S&P 500. And tomorrow they might be like, you know what, I should probably also lock in my profits, because it's better to have locked in your profits at a 20% gain rather than trying to chase that 30% gain. And if you didn't lock in your profits, you could be at risk of going back down into the negative if the stock market continues to pull back like we saw back here in March. So if you take a look at this trend here, you know, there are some major red candles followed by more downwards pressure and some major red candles and more downwards pressure. And all this kind of spirals down as investors have their mentality broken down and they decide to sell off. Lastly, I want to take a look at the Apple charts here, because Apple is the largest stock in the S&P 500 right now. So whatever is happening in Apple, the S&P 500 reflects. And you can see here that Apple and the S&P 500 stock have a fairly good correlation. So if we go back in time, you can see that they follow quite nicely. And if we go back further in time, it's also quite nicely. However, Apple's a little bit more amplified than the S&P 500. So if we take a look at the latest candles in the Apple charts, what we should notice here is that on this day here, August 21st, there was a huge candle upwards. And then the next day we had a red candle downwards. And note the volume here, these were two volume spikes that were almost equal in magnitude. However, if we go a little bit further the next couple of days, we can see that we had some fairly weak volume and the stock didn't really move much in terms of price within that day. Essentially, it opened and closed almost at the exact same price, squeaking out just 0.82% change on this date and a 1.36% change on this date here. And then we also had a couple of red days here, but also with fairly weak volume. And then on the split day and the day afterwards, we saw the stock price move up fairly heavily. However, the volume didn't really match that, which meant that to me, looking at this, it was moving up on fairly weak volume, so investors didn't have as much conviction. And then yesterday, we had a huge sell-off in Apple. And I think this, you can almost say, was a leading indicator of that the S&P 500 was going to fall today. Because when we look back, today we had a pretty bad day in the S&P 500, but the day before, the S&P 500 actually had an all-time high. So it's interesting to see that Apple led the S&P 500 by one day. And again, today, Apple also declined. We can see the volume is picking up here. And I can almost imagine that Apple might see another fairly large red day tomorrow, bring it down to this little support level that we have here, around the $113 mark. And if we see that happen, then my prediction going forward here would probably be that Apple will probably stay around this level, bounce around, and then who knows what's going to happen after that, because when we go into October and November, we're approaching the elections and there's quite a bit of uncertainty. We could see more investors sell off, and that's the risk that we have to take going forward. However, as a long-term investor, you should be welcoming these sell-offs, because A, you can be opening up new positions in stocks that used to be fairly high and you're getting them at a cheaper price. And B, you can dollar cost average into the stocks that you own right now and get them at a cheaper price than they were a couple of days ago. So the key takeaway for you guys who are beginners in the stock market, don't panic when you see a huge red day in the stock market. This doesn't mean that there's a trend or a correction that's going to be happening. We have to wait a few more days to see what's going to happen. But if you're a long-term investor in the stock market, You shouldn't be worried. In fact, you should be welcoming this and you should be adding to your positions and throwing cash into the market slowly. Don't do it all at once like I've done before. You should just average in maybe every week or so and continue putting money into your account, because that way you're able to ride the wave down, and as the stock market eventually always corrects, you're going to be able to see major stock price appreciation or capital appreciation in your portfolio. If you guys enjoyed this video, drop a like down below, as well as hit the subscribe button and the notification bell for future videos. I plan to release a video tomorrow or the day after that about an options strategy that I've been adopting, so you'll want to stick around for that if you're interested in options trading. Keep up the grind and have a great day.